Hello guys, glad to have you on board again. Today I wanted to talk about some other ways in which you can have a broader visions of flow trading. Though remember one thing, same old story, you figure out the lowest strategy area, and as long as you are in the speculative area, just deal with that lowest strategy. And when you start to have positive reactions of this, though basically in here for us that was the big massive weekly support, 50% Fibonacci's and the like, and stuff like that. Though once this area has positively reacted, we had bullish flow reactions. Okay, so the thing is that the flow trading always happens in the time frame -3 context. So you will trade H1 contexts for flow trading. The thing is that if you just zoom it out for one time frame above, okay, remember that when you look at the 4-hour chart, then your flow trading will appear in the trend channel, because basically remember that the H1 time frame context is the trend channel on the 4-hour chart. So if you just zoom out for one time frame scale, basically you will have a much broader vision of your context trading, and I generally personally tend to do it a lot, because remember that when you trade on a context basis, the H1 time frames, okay, that means you can also, that's kind of adding spices on top of your flow trading, look at the types of signals that could occur on the higher time frame, because remember that trend signals on the trend channels matter a lot in the strategy. So this is one thing you can add up on top of your flow trading. Always do it in the reference context, so always do apply the flow trading strategy on the H1 time frame, but just a little once in a while, when you figured out and trade entry on the H1 time frame, you might want to eventually have a look at the 4-hour chart, because it will give you some trade opportunities. Okay, though the thing is, it does two things. It gives you trade opportunities when you have trend signals on the trend time frame, but it also will help you a lot having a broader vision of the flow trading, because in here you've zoomed out, so you see 4 times more candles. Okay, though in that perspective you can clearly sequence that flow strategy. You can see the first flow in here when the trend channel has gone up significantly. You can see the 3rd range boundary very easily. You can see that your second flow has started trading in here. It exploded to the upside in here. This is where you can see that prices are trading inside a rising trend channel. You've seen your 2nd, 3rd range boundary in here, just a bit of noise in here on the extended hours trading, and then 4th range boundary, very deep. As you can see, we might have seen something that was close to a bear flow, in which, well, prices have been severely consolidating in a falling trend channel, but we've taken over control, and now here is our 3rd big nice flow. Okay, so this one, as you can see, trade in a very narrow trend channel. So this is something you really want to bear in mind. Okay, this one has a very restricted type of price area in which it works on. You can see that in here we could have had somehow of a 3rd range boundary, but we didn't, which means we squeezed out of it. And what you can clearly see in here is that channel that I've been mentioning for a few times now. This is consistently the sign of a washing machine pattern, meaning that this pattern can trigger so many times in a row, and everyone trying to fight against it will have troubles. So pay attention to the fact that in these types of flow trading, I would personally not be too aggressively taking profits. The thing is that we might see other 3rd range boundaries like that, okay, but as long as we do not break out of this channel, meaning that to me I build out from the low points, okay, and build out from the whole history, okay, so basically as we going up, okay, I will generally tend to do it that way, building the highest highs from the lowest lows. Okay, we're trying to consolidate. Okay, so remember that when the prices are trying to go down, all you do is taking the latest market tops and build it and build your channel to the lowest bottom. Okay, so from what you can see in here, as long as we don't significantly break out of this channel to the downside, meaning, okay, I will not worry at all, like really at all. We've already squeezed out a 3rd range boundary, and that is the #1 sign that your actual washing machine pattern could be at play. Okay, remember that normally in flow trading, 3rd range boundaries act as profit taking points for general traders. In here, you've seen that it didn't really work out that way. We've gained some strength out of this area. So pay real attention to this. In these specific contexts, you really want to just zoom out and have the bigger picture. And you would see in here that your H1 context is very, very narrowly traded. So in these contexts of converging trend lines, you would definitely build fake flag third range boundaries, okay? So take a step back, zoom out, and have a look at this. That's the #1 rule. Remember that all the time. When you see something that looks inconsistent with your general knowledge of the strategy, like, yeah, in flow trading, squeezing third range boundaries should raise some red flags and say, well, I haven't seen that one happening a lot. Normally, third range boundaries are profit-taking areas. So when something seems a bit odd, just zoom out to the higher time frame, and you should always have that thing. And you would see that, well, right now, what we've done yesterday is actually triggering a triangle with a trend signal on the trend channel. So this is just bullish as fuck. And in that perspective, well, instead of being worried that prices may eventually do this or that or whatever, you should just wonder, does it really matter? Is this market really bearish or showing any signs of weaknesses? I don't see any such a thing. Most importantly, there's one thing that I'd like to tell you, okay? Most of the time, flow trading, okay, on the higher time frame, tend to also deploy prices above the high time frame context. So this is where our 4-hour context is. And normally, H1 flows will have recurringly the persistence of trading above this context. So I think this is where we're headed anyway. That's also the reason why, even though we have that choppy market trading inside the trend channel, I think there's one and only target for these prices is to go up here. It's going to take some time. Like we said, we can hash prices in a very weird way as long as we trade inside that channel. But I do think anyhow, we're headed in those above resistant context territory. And of course, these are the areas in which you really want to lock on your gains. Just pay attention to what happened back then, okay? Flow trading tend to have hard times trading above the higher time frame context. That's not a general rule, it's just that, well, if you're looking for profit-taking areas in which price may have overextended their rally, well, this is the way to do it. At least that's the way I personally do it, okay? So when you want to anticipate the areas in which likely third range boundaries will build themselves, well, this is the way to go. Now, if you zoom it out and you, for example, use a replay function, okay, to try figuring out how improbable this area was to react as a third range boundary, well, just look out, just zoom out a bit. Would you really think that this flow would terminate this way here? No, you know that flow trading generally tend to terminate above the higher time frame context. So that's the reason why I personally didn't really trigger too much profit taking here, anticipating the fact that, well, we're very likely going to be traded higher. Okay, so this is just something that I wanted to add up today, okay? This is kind of a more professional approach of flow trading. Also remember that the #1 rule is to follow the flow sequence, which is don't try to overthink things, just go dumbly following this thing until there are third range boundaries, okay? Though today I just added up some spices like that. When you see one third range boundary being squeezed for whatever reason, there is significant message in here. Zoom out the higher time frame charts, and most of the time you will see the answer to that question by the fact that the 4-hour chart will tell you exactly what you wanted. What you have in here start to look like a trend. You're breaking out of the bear cycle, you're trading inside a narrow, consistently parallel trend channel. That's the sign that something odd is occurring. You're destroying the bears, though what's the point of being irrationally bearish now? It's really all pointing out to more bullishness. So just try to be rational enough to understand that in these types of sequence, you really rather like to be a bull than a bear. That doesn't mean absolutely stupid, outrageous bull, because as we've seen, we have a choppy market. But try not to let yourself go with that bearish sentiment too soon, okay? And one tip that I can give you is if you really want to get worried about prices maybe eventually having overextended their rally, well, look at that. Just zoom to the higher time frame and listen to what I just said. Most of the time, which is not a generality, but most of the time, flow trading tend to find their tops above the higher time frame context. So in this 4-hour lookout, I would say there's still plenty of room to go, and I'm not nearly worried about the prices reversing now. It could happen. Remember, flow trading is unpredictable as hell. But the thing is, if you need to have reasonable or I don't know, viable reasons to actually start to be concerned that maybe you've made too much gains and you should actually start to profit take some of them, well, that's the way I do it. I don't let myself be influenced by too much gains, though I really need to take them before it reverses. But do I have reasonable facts showing me that I should earlier than expected start to lock up some gains? This is the kind of signals that we pay attention to. When we go bullish, when we trade above the higher time frame context, and when this one is detected as a variable context as well, as you can see in here, no signals. So I was like, yeah, if there is some profit taking to make in here, it's not a significant one. It's just, well, eventually would worth it. But anyway, even if that one triggers the reversal, I would always get the third range boundary to follow through. So that is how you should approach these flow trading in a safe manner. Don't try to fear of not taking profits and losing all your gains. Just try to rationally eventually zoom out a bit and try to figure out the inflammations, okay? If you have reasons to take profits earlier than expected, this is the reason I personally use to do it. Trading above the resistant context of the high time frame is a sign of a flow trading that might have overextended its reach in a shorter time frame, and that might just cause a pullback without necessarily quitting and reversing the context. All right? So until then, I hope I teach you something valuable today. When it comes to cryptos, well, if you put out this same example in here, you would see that most of the time, what sounded like an absolute irrationality earlier in the shorter time frames. Remember, this is our H1 context. So we've said in the previous weeks that most of the time these sounded kind of irrational, unfounded cottage boxes and like that. These are the kinds of technical elements like squeezing a third range boundary, having irrational context plotting. All of these things should tell you just one thing: zoom the fuck out. And by looking at the higher time frame, most of the time you will have explanation of what it is. Okay? Because you're going to put your H1 kind of irrational behavior into an H4 context. Though in here, you would do the same analysis we've just done in the S&P 500. You will see your first flow in here, kind of a weird, long and painful consolidation, still maintaining higher lows, breaking the previous high point, going irrational. But look at that. What you've seen as being totally irrational earlier is just breaking the context and having a low volatile trend channel. So instead of getting worried like, you would say, well, I don't worry too much. This is just the sign of more bullishness than anything else. So the third range boundaries in here fail to confirm. We're just getting flat and bullish. And this is nothing but telling you that if you sell prematurely on these types of contexts, it's actually the opposite what you should do. In here is exactly what I do personally. I get to reinforce my positions cautiously instead of just trying to get out prematurely. These are just a sign that it's getting better than anticipated. Though, remember that, okay? If it feels like you urge to the exit because, well, you've made more gains than anticipated, or for whatever reason, you feel like you're going to lose it all because it's going to reverse and stuff like that. Instead of acting through irrational behaviors and irrational emotions, when it feels like the time frame you're trading on acts pretty weirdly, zoom out to the higher time frame and look at your trend channel's behavior. Most of the time it will give you the answers. Would you ever sell something like that? No, I won't. The thing is, that's the same for S&P 500. You have all the signs showing that this rally still have some gas in the tank. It might sound like painful and weird to trade on the H1 reference time frame, but it certainly doesn't show any signs of weaknesses or losing strength in the higher time frame when you look at this same picture through the trend channel. Okay? Though that's really today's lesson. Okay? So don't do it all the time, but when the H1 time frame, your flow trading seems a bit odd, just zoom out. Most of the time the answer will be on the trend channel side. That being said, more than enough for today. I'll see you guys again in Monday with an update on the general lowest time frame context. Bye-bye.